So that's a bullish formation. So I expect at some point over the next few weeks, maybe latest in January, but could happen earlier as well. The gold will break out above these resistance between 2,670 and 2,700. Then there's another one at 2,750. But I think overall, it's just a multi-week consolidation, a healthy breather, and most likely gold will continue towards 3,100. And my expectation is that silver might now, or over the next few weeks, take the lead into spring. And I think there is a very good chance that it can rally up to maybe $50, let's say by February, March, April, May, something like this.
Financial analyst Florian Grummes sees gold poised for significant gains. He projects a breakout above resistance levels between $2,670 and $2,700, with additional resistance at $2,750. His analysis suggests gold could reach $3,000 to $3,100 by spring, supported by current market dynamics. This bullish outlook is echoed by Tait, who forecasts gold hitting $3,000 by 2025, driven by robust demand from major economies, including Japan, China, and India. Recent market activity supports these projections, with gold currently trading around $2,650, maintaining stability above the $2,600 level. The latest spot price of $2,637.78 per ounce represents a 0.22% daily gain, reaching $2,645.73 overnight. This upward movement coincides with improved consumer sentiment data and slightly higher one-year inflation expectations. Grummes identifies a bullish consolidation pattern forming a triangle within an uptrend, suggesting continued momentum. The current price sits more than $120 above recent lows, indicating strong market support. Silver's outlook appears equally promising, with Grummes noting its outperformance of gold after establishing a double low below $30. He expects silver to lead the precious metals market in the coming weeks, with the potential to reach $50 by spring. Kitco's analysis aligns with this bullish sentiment, with more conservative projections of $36 to $38 per ounce by 2025. These forecasts are supported by increasing industrial demand, particularly from green technologies, and an expected moderation in the gold-silver ratio. Market fundamentals remain strong across the precious metals sector, with multiple factors driving growth: central bank acquisitions, geopolitical uncertainties, and increasing industrial applications. Technical indicators combined with these fundamental drivers suggest sustained upward momentum through 2025, mainly as consumer sentiment improves and inflation expectations adjust. Before we dive deep into this video, make sure to subscribe to our channel, hit the bell icon so you never miss an update, and share this video with your friends and anyone who might benefit from it.
So I wrote a piece a week before Donald Trump's election, and I said most likely if he wins, and it was already obvious that he would win, most likely we would see some profit taking in the gold market and this kind of like a war premium coming out of it, because I mean the rally in gold has been massive over the last 2 years. It started at the triple low at 1615 in October, November 2022. And here we are. I mean, it rallied nearly $1,200 over the past 2 years. And a large part of it, I think, has been also driven by geopolitics. And so once it became clear that Donald Trump would be the next president, gold started that pullback. And it was due. I mean, it was very overbought, overheated. So it pulled back from 2,790 down to 2,535 within 2 weeks. Very sharp, violent pullback. But here we are. We're trading around 2,650, so more than $120 higher than that low. And market seems to be stable, holding above the $2,600 level. So I wrote about most likely we will get some form of a triangle consolidation. That seems what is playing out here. And within an uptrend, so that's a bullish formation. So I expect at some point over the next few weeks, maybe latest in January, but could happen earlier as well. The gold will break out above these resistance between 2,670 and 2,700. Then there's another one at 2,750. But I think overall, it's just a multi-week consolidation, a healthy breather, and most likely gold will continue towards 3,100 and maybe even higher into spring. So that's the main assumption that I have right now, the main thesis. It's a healthy pullback, and it seems like we've seen the low already at 2,535. maybe another dip towards into slightly below 2,600 possible, but that would be already a buying opportunity again. And what I especially like here is that silver is showing up nicely, starting to outperform gold. So we had a double low slightly below $30. This psychological level has held overall. And we're seeing it moving up now. We're seeing the silver mining stocks breaking above an important downtrend line. And my expectation is that silver might now, or over the next few weeks, take the lead into spring. And I think there is a very good chance that it can rally up to maybe $50, let's say by February, March, April, May, something like this. So I don't think the rally is over in precious metals. I think it's a healthy breather. And I think we're seeing now being a base being built for the next leg higher. And in that leg higher, probably silver will really show up to the party.
According to financial analyst Florian Grummes, gold's bullish trajectory is fueled by strong demand from Eastern central banks and robust physical buying in India and China. This pattern underscores gold's 5-decade legacy as a reliable store of value, particularly during economic turbulence. The metal's inverse correlation with the US dollar strengthens its position as an inflation hedge. As a dollar-denominated asset, gold typically appreciates during periods of dollar weakness, attracting investors seeking protection against currency volatility and inflationary pressures. Current supply dynamics reinforce optimistic price projections, with mining production lagging behind escalating demand. The growing influence of extensive ETF holdings and increased central bank acquisitions has created significant upward price pressure. This supply-demand imbalance, coupled with substantial reserves held by central banks and government vaults, further cements gold's crucial role in the global financial system. Grummes observes a paradoxical market environment where Western stock markets reach new highs despite recession concerns, driven by inflationary policies and eroding confidence in fiat currencies. This economic backdrop has heightened the appeal of hard assets, including gold, stocks, Bitcoin, and real estate, as preferred vehicles for wealth preservation. Let's get back to the video.
The fact that it first got priced out, and then, of course, a week or 2 weeks later, with the Americans allowing long-range missiles against Russia being used by the Ukrainians, basically gold immediately within a week priced in. It rallied from 2,535 to 2,720 within like 6 days. So that was like $160, $170 rally. And that, as you rightly said, I mean, the war premium got priced in again very quickly. And we have to see how this all plays out. It looks like the Biden administration wants to create as much as a mess as possible and make it as difficult as possible for Donald Trump to maybe start some peace talks. I think they ship as many weapons as possible during the next few weeks to and into Ukraine. And you also mentioned some of the other geopolitical hotspots showing up. So yes, that can and will drive gold higher again. And of course, we have ongoing central bank buying, especially from Eastern central banks. We have physical demand out of India and China still being strong. We briefly talked about the fact that a large part, at least 50-60% now of the international gold trade is going through Dubai. Things are shifting away from the paper gold markets in the West, which have dominated the price finding of the last 50 years, basically. And yeah, we can see that these paper shenanigans at the COMEX and LBMA are not able to suppress prices as they were able in the past, you know. So this is simply changing. And if there's not enough gold physically, then it will be difficult to suppress prices. If in other parts of the world people are trading physically, as in Dubai, as in Shanghai, as in Mumbai. So that's what's happening. And it's a process that is not leading to a gold price explosion overnight, but it's something that we now see over the last 2 years. And I don't think that this trend is over. I'm very sure that the market wants to see $3,000 as well. Most of the Western world has not really participated in that whole gold rally, which is also a reason why many of the mining stocks are lagging or have not done that well. But overall, yeah, I mean, many central bankers also in the West print and push money into the markets. The liquidity is there, the money flow is there. So that's what it is right now. I understand, and I mentioned it before, with the example of Germany, you have recession, you have massive problems in the economy, yet stock markets making new all-time highs. It doesn't really make sense. But then again, if you take the cracker boom theory, that's exactly what is supposed to be happening. If you, on the one hand, you're devaluating the currency by constantly creating more of it, and on the other hand, basically diminishing or shrinking the confidence of the people because they're seeing you can buy less and less with your money. So you have to escape into hard assets. And obviously stocks, precious metals, Bitcoin, and real estate are those hard assets.
Gold and silver remain key assets in times of economic uncertainty, with growing demand driven by central bank purchases, strong physical demand from major markets, and their roles as hedges against inflation. As geopolitical tensions and economic challenges persist, both metals' appeal as stores of value remains strong. Gold, with its established position in the global financial system, and silver, increasingly seen as a more affordable alternative with industrial applications, offer distinct advantages. What are your thoughts on the future of gold and silver? Do you think their prices will continue to rise? Let us know in the comments below. If you found this video insightful, don't forget to like, subscribe, and hit the bell icon to stay updated with all our latest content. Thanks for watching.